What up, retail family? Welcome back. It's your boy D, and this is D's Daily DD. I just want to come in here, make a quick update video. Nothing too crazy, nothing too long. Kind of just want to touch and talk about what happened today because it was a very crazy, volatile day in the markets, and it was for a reason. It's because Jerome Powell was speaking and giving updates and raising rates and so on. So that caused a lot of price action movement across the board, across all stocks. Now, remember, I'm not a financial advisor. This is not financial advice. Don't take it as that. Take it for entertainment purposes only. Always make your own decisions, do your own DD when it comes to investing in the markets or whatever you're doing with your money, right? I'm just here to give you my thoughts and opinions and some data and how I analyze the data. But yeah, Jerome Powell, he basically stuck a knife in the markets today. And as expected, though, I did expect him to raise the rates. It's a 0.75 point basis rate hike again. And, personally, I think this is really bad for the short sellers because it doesn't cost us to hold. Yeah, the price goes down. Yeah, they try to short it and manipulate it and, try to crash the price of Ape and AMC and GameStop and so on. But I can tell the people are not leaving. I can see in Twitter, I can see in social media, I can see all the people that are like, screw it, let them bring it down, I'll buy more. And we're honestly just waiting for for the Adam Aaron announcement, whatever he's going to announce on earnings, which is November 8th. And he put out a little tweet today talking about Highcroft and talking about the gold and the silver in there and so on. But we don't know what he has up his sleeve. And I'm just going to give you a quick update. This is just kind of more of what happened today, and I'll kind of give you some thoughts on what I think is going to happen here with the rate hikes. All right, let's move on to the first thing. The first thing is Fed hikes interest rates 75 basis points again. Powell says very premature to talk about pause. So from what I got from it, they're not stopping. They're going to continue to raise the rates, which personally means that it's going to be very expensive to finance anything, any type of money that you're borrowing for a house, a car. Short sellers, how they borrow money, right? To short to borrow stock, right? They have to pay a fee, and so that's what I'm keeping an eye on, and that's what happened with that. All right, so just know that there is more rate hikes that are coming. And it's interesting how he also says, Fed Powell, that there is no indication that inflation is decreasing, which, right, that's pretty crazy after all these rate hikes. But I still, personally, too, I also think that more is needed because they're saying they're not seeing a lot of, downward pressure in the inflation. So, just bad news across the boards. But remember, nothing is ever as bad as it seems or as good as it seems. So what I'm just seeing, though, it is bad. There's a lot of companies talking about layoffs. Wells Fargo here is one of them. And I saw many tweets where there is a lot of companies that are, getting ready for those layoffs or are already doing it. And, this is what stuck out to me, that the S&P cuts Credit Suisse's group rating to one step above junk status. And that's really bad. That's some of the lowest, right? They're right above junk. So they're they shouldn't be, putting out these hit articles on AMC. Like, what do they really care about? Because they're not doing so well, right? So they have been downgraded its long-term credit rating to one step above junk status, citing material execution risks in the Swiss bank's efforts to get back on solid ground after a series of scandals and losses. Yeah, they've lost a lot of money. Their share price is barely hanging on to like four something. So it's crazy, huh? How they come out and say that, oh, AMC is going to go to 95 cents. I personally think they're holding the bag. I personally think they have shorts that they need to cover on GameStop and AMC. And that's why they are doing that. But you have important people that are leaving, right? I noticed right here it's talking about if you're a rival bank that wants to hire a senior trader from Credit Suisse, now may be your time following last week's restructuring announcement. We understand that at least two managing directors have left the Swiss bank in recent days. In Singapore, head of G10 FX forwards trading is understood to have quit after 18 years. In London, this person, Markov, emerging markets trading, has gone. He joined CS in 2013 from a Russian bank. So right? They're losing their workers, they're firing people. You know, I don't know how they're gonna survive much longer. Yeah, and everyone's going crazy, right? Because everyone noticed that they got downgraded. um, so that's all I really got. You know, I think it's crazy how we're in these. This is GME, but we're in this triangle here, and it seems to me like they're running out of time. You know, at this point here somewhere, because it already tried to break out, got rejected, almost got it, got rejected, and then this last time that it got halted, I think that was for a reason, right? There's people that have, you know, commented and told me I think the breaking point was $45, and that looks about right. Because if you look, put a line like around here, right? That's around $40. So that would be a clean break. If you can get a clean break with the amount of shorts that are piled in, I think you would see a massive move there personally, right? And then same thing with AMC. We're right at the end of this triangle. And usually what happens before it's going to break out of the triangle, if you look at my mouse here, right, it dips and then you get the break, and that's how you start to make the move. So of course the bear situation is that it could go down. The bullish situation, right, is if it comes to the end of here, I think we're going to see a massive push again because of the massive amount of short sellers that are in there that they can get burned. And it's interesting how the dates line up, but you know, here coming up soon, the next week is the AMC earnings, and again, we have to wait to see what kind of information we're gonna get from that. And just the other thing is, when AMC squeezed in June back here, this is the S&P 500. If you look at this whole area, the S&P was going up, so that was a lot of pressure on the short sellers. And now, ever since December, January time, you know, it's been in a big downtrend. So personally, unless something crazy happens, right, where margin calls go out, something breaks, you know, the interest rate, a big massive short seller wants to get out of AMC or GameStop, then we're not really going to squeeze until the S&P 500 turns around. You know, that's just being realistic, because we're fighting against, you know, we all expect a short squeeze, but the whole market is going down. So that's not in our favor. That's in the short's favor, right? So what I expect here in the next, you know, couple weeks is for the cost to borrow on AMC to shoot up again. That's what's happened in the past when the rate hikes went up. And what I'm looking at right now, supposedly there's only 3,000 shares right now currently at 16%. You know, it has dropped from 22%, but the rate hike just got announced. It's a big one. So I expect this cost to borrow, the red line, to shoot up again. And so if you're a short seller, at what point do you say I'm out because, you know, I've already made some profit, I got to lock in the profit? They don't lock in profits until they buy the shares back. So, you know, we'll wait to see what happens. A major catalyst could be coming out in AMC too, but in this game, I think it's just going to be, you know, a waiting game, and I think patience is going to pay at the end of the day. And remember, there's all these short sellers that are still in here, you know, JP Morgan. These are the short interest owners, 471,000 shares here. And there are some that are closing out, but these are puts. A lot of puts have been closed out recently. And but you still have a lot of short people, a lot of short companies in here. So yeah, that's just a quick update. Just kind of want to give you my thoughts and opinions for today. And you know, if you study options, there was a lot of opportunity for options and money making today, but it was very quick, very volatile. So I don't recommend it to any new traders. You know, you have to be experienced, you kind of have to know what you're doing when it comes to that. And yeah, I'm holding. I don't think people are leaving, whether it's, you know, GameStop people, AMC people, Nokia, whatever, all these highly shorted stocks. I think the MOAS now, personally, I think what the MOAS is going to be is not just one stock, but all these meme stocks. When they squeeze, I think that's what's truly going to be the MOAS. So that's where I'm at today, guys. Okay, so thanks for tuning in. Thanks for watching the video. I hope to catch you in the next one. Peace.